You did crazy, oh, you ain't on a payroll. Can't be hanging with the same bros. We don't even go to the same shows. So please be quiet. I'm being polite.
Hello guys and girls and welcome back. It's Big John here, the at's at the bottom of the screen if you like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'm going to be doing is I'm going to be showing you how to use two oscillators, that's two TDIs, and I'm going to show you how you can avoid fake outs. So we're not going to avoid every single fake out, but it's going to help you with divergence. I hope you're going to like this one, guys and girls. So let's get straight into the video. Oh, wait. I was about to get into the video, but nah. We need to make sure that everybody is aware of the free, yeah, that's right, I said it, the free signal competition winners. So originally I was only going to do one winner, but you know, I've taken a little bit of time and I love you guys and girls and I respect the fact that you watch my channel and you're even here for me in the first place. So I've decided to do 3 winners and we're still going to have another 3 winners at the end of this month. So in this video, don't forget to watch to the end and know what you need to type to become the winner of July's competition. The 3 winners are going to be announced at the end. Now, let's get straight into the video. Okay, so this is going to be a pretty straightforward, simple video, but I am going to go over a few pairs just to show you so you can understand what I'm talking about when this setup happens. And it's actually fantastic, this setup, because not only does it, you know, lessen the amount of fake outs that you get in the market. I know that's a huge problem a lot of traders have when getting good entries into the market. But what it does is it enables you to catch great trades that give a good amount of pips. Now, I'm not saying this will happen all the time, but you know what? It can help out a lot. So let's get straight into this. So what you can see on my chart now is I've got the Asian range indicator. I am doing this strategy on a 30-minute time frame. Reason being is that it makes sure that the TDI is not so congested and as many fake outs that you might find on the 15-minute time frame. And what I've got here, let's just double click. I've got 2 TDIs. So you can do this with a free version of TradingView where you can only have 3 indicators. If you want to get a paid version of TradingView and you want a referral link to get some coins off your monthly payments, please click the link below and that's my referral link. But as you can see, I've got 3 indicators on here. So once again, that's the Asian range indicator here. It shows me all of the sessions within a trading day that I need to know. I've got my 2 TDIs here. This is a default TDI. I will go over the settings of all of this stuff at the end of the video. And I've got another indicator here, which is another TDI. But for this TDI, I would like to call this one a divergence TDI. Now, why I call it that is because the settings on this one here are just set to 12 and 26. So you can see my fast MA is set to 12 and my slow set to 26. Very similar to a MACD, but this time it's on a TDI. I like it on a TDI because it shows me a bit more clearer M's and W's, and it just helps with sentiment trend in the market as well. Plus, I'm a big advocate of a TDI. Anyone that's been watching me long enough would know that. So as you can see here on AUD USD, last week, we had a lot of volatility in the market the last 4 weeks as well. We had a bullish divergence formed right here. So price was coming down, TDI was coming up. And then what we're looking for here with this, I will link my divergence video right up here just so you can understand divergence a bit better, so I don't have to go over it completely in this video. But then what we're looking for here when we did see this divergence forming, and what is great about this is we can let divergence finish first. We're just waiting for another crossover right here on our divergence TDI. This is all we're looking for. So once this divergence occurred, then we're like, okay, we can see divergence has occurred. I understand that. Now the next thing we're looking for is we're looking for divergence on this TDI here. So our bullish trigger really was going to be around here to get a good entry into the market. Whereas before you might have entered somewhere else, maybe you might have entered here, which wasn't bad. It was actually very good this time, but sometimes it can fake you out. So this was this trade here. I've put some risk to reward setups for you so you can see. If you gave yourself 40 pips stop loss, you'd have been able to get 72 pips in this trade. So we'll go over to some other trading instruments so you can see similar setups. So this was a trade I actually gave out in my mentorship group. If you're interested in that, join up the Discord. The link's in the description below, and just give me a DM and then we can discuss how you'd be able to gain access into my mentorship VIP group. It is a paid group, I will say that from now, but it's very worth every single penny or pence or whatever you'll spend on your mentorship. So we can see right here that price was going up again, 30-minute time frame, price was going up, and then we could see the TDI was going down here. And on our divergence TDI, we just wanted to wait for it to turn red so a bearish move would initiate. We could see a bearish trade happened right here, and then look at the risk to reward on this trade. So you had to have, let's say, a 40 pip stop loss, and then you can see straight away this was a 191 pip trade all the way down to here. You might be asking me already, but how do I know when to get out of these trades and stuff like that? Well, once again, it's always best to learn how to take profit levels, or where to know when to come out of a trade with market structure. If you need to learn more about that, once again, hit me up in mentorship. So you can see that this trade went 190 pips down, and you can see how I was able to give a nice top to a trade and a bottom to a trade, and even using this strategy alone you would have been able to get in. I just got in based on market structure in this trade, but this is a nice way as well to get in these types of trades. CFJPY. So as we can see from CFJPY right now, we can see that there was two setups on this trade. So we actually had a bearish divergence from here to here on our TDI, and then we had a double top on price action, so there was an inconsistency. And we can see how we had an entry right here because the divergence TDI turned bearish. If you came in here, there was pretty much no drawdown. You're going to see this a lot of the time with what I'm showing you here. There isn't much drawdown on these trades, which is excellent. I can't say it will happen all the time. Trust me, I cannot say that. But what I can tell you is it's a great way to get into the market again. So we can see that there was pretty much no drawdown here, 40 pips stop loss, and this trade went down to 157 pips. And then what was even more fantastic, the last couple of weeks have been amazing in the market for trend traders. They must have made hundreds of pips. I know I did. And you can see straight away here, there was bullish divergence right here. We had another bullish divergence on price action showing us price going down. The TDI was going down ever so slightly. Now this is a bit of a dodgy one. You can say it was divergence. It wasn't. I would have called this divergence myself. I would have said it was a very small regular divergence. And we can see right here, we had a crossover right here, and then you would have been able to get in and catch this trade going all the way up for another about 140 pips. I actually got into this trade on my Signal service. I've got that as well, Signal service, and Signal users was able to catch this last week. Here's another fantastic double setup. You can see right here that we had a massive amount of bullish divergence forming right here. Look how far price was coming down, and look what the TDI was doing. So you could see this is where you get confused in the TDI. People will be like, was I supposed to get in here? It crossed the sentiment line, it came back over. Here was my entry. Should I have got in? Oh, I got faked out. Oh, what's happening, Jonathan? What do I do? Well, here you go. Look how clean this W even looked here. So look at the difference in this TDI and look at the difference in the divergence TDI. So we would have only been looking to gain entry around here. And then when we gained entry around here, look how perfect that was. When the divergence finished and we can see price was even going up now, we can see straight away we had an entry here and we would have caught this trade going up. And this was a 325 pip trade. This is amazing. This is a crazy, crazy trade that you'd be able to catch from this. Once again, this is not going to happen all the time catching 300 pips, but yes, you can catch some decent pips because divergence is when price is overextended. So when price has gone too far up or too far down, it has to correct itself, and it has to correct whatever it kept pushing up or pushing down by plus some more. This is why you get big trades with divergence. We can see here another one straight away here. There was a bearish divergence here. You can see on the TDI, I didn't even mark this one out, but you can see straight here, there was a bearish divergence there on our normal TDI. And then we would have looked to gain entry around about here. So if we gained entry here, you still would have made this trade catching it from around here all the way down to here before it started to even pull back like this. Now, this is why I put this line as yellow here so we can discuss this trade a bit better. As I said, some things are not going to be perfect and you're not going to be able to catch everything the way you want to catch it. But it's about understanding what's happening in the market and putting yourself in a position where you're like, you react as a trader to what you see. We can see that there was some type of divergence here. Let me just mark out this one here. So we can clearly see that there was bullish divergence that formed from here to here. I actually did call out this buy on this divergence in the VIP chat group, so people were hopefully able to catch it. I know I did. And you can see straight away what the problem was here. I believe it was a news event that actually happened, is that price bought up at least 70 pips. Now that's not a specific number, but it's a high amount for what the pair actually does do in a day or just in general. So when the bullish divergence strategy came into play, you can notice how high up price was. When you're looking for a stop loss in any of these trades, you want it below the low or above the high. So you would have tried to put a stop loss here and you would have had to wait, and you would have been thinking, okay, you know, this is a huge stop loss compared to where price is. Yes, I would agree. So I put a yellow here as almost like, just look at what you're taking in terms of a trade. Maybe you don't want to take this trade because price is pushed too far up. But even if you did take this trade, we'll just put our entry right here, and then we'll put our stop loss below here. You can see this is a bit crazy. This is about a 90 pip stop loss. It's not the worst in the world. I take 100 pip stop loss. I've got no problem with that. And you can see how far price pulled up. You're in a position where you have to say, is this trade worth it now? Because the risk to reward might be too small. So you don't want to take that trade. So you can just let it go. I'm going to show you loads of pairs that are doing this. So you don't have to take every single trade. So this is why I just wanted this one to be marked out for you. Even though it was a winner, it's still something you didn't have to take if you wasn't sure. Okay, Euro Great British Pound. So we can see here that there was once again bullish divergence that occurred here. And then after the bullish divergence, look how much time. This is when I tell you about how much time sometimes you have to enter these trades. You can clearly see there was a divergence there. So if you've come to check the charts during, just Asian before London breakout, or even during Asian session, I know for people in America, Asian session isn't too late at night. For me, it's like 12 in the night, so it's really late. So sometimes I'm trying to catch my, my Z's, my sleep, man. You would have been able to gain entry even here in Asian session for this move that went all the way up. So you could have had a 20 to maybe 25 pip stop loss, and you would have been able to catch 67 pips for the buy going all the way up. Euro New Zealand. Now this was a fantastic trade. Once again, I can use a lot of price action and other strategies to gain entry into trades. This is not the only strategy I use, but just like even today, I told one of my students it was gold even, I said, they wasn't too sure if it was going to sell. I said I think gold will sell, and yes, this strategy can work on gold as well, but I'm just not going to be showing it in this video. You can test it out yourself if you need to, but I told them just put on the double TDI and see if the divergence is there. They've put on the double TDI, they've seen something they like that looks like a trade, and they have taken that trade. Now this was one of the trades I have given out, and you can see the same setup. Even when I've put this strategy onto it after, I've said, oh wow, even this was perfect for this setup here. So you can see straight away we have bullish divergence appearing on price action, and from here to here we can see that the normal TDI is going up as well. So we can see that this is definitely a divergence forming here and here, and then our entry would have been around about here. So look how great this was. So in fact, it's even better that I show you this. Now you can see that the TDI here, the normal one, has already turned bullish, plus this one has already been bullish as well. So instead of you waiting for the next bullish turn of events, which could have happened over here, and you still would have won that trade, but what is great about this is that you could have said, okay, I'm still going to enter this trade and try it, because if you are right, this trade can go on, it could be a 1 to 4 trade, it could be something like that. So even if you lose the first trade, you can still end up winning big on the next trade. And I will always make sure I add in there, it doesn't have to go that far. You need to know trade management, because too many people will listen to people on YouTube and other places and believe everything they say is absolute gospel. They will lose trades and then they will come back and blame the people or blame the strategy. It's not that. Everything in Forex is based on numbers. So if you are winning over a period of time more trades than you're losing, you will be a profitable trader. So take some type of heed in that, be happy with that. Don't beat yourself up. You don't have to have a 90% win rate. What's the best strategy? Let me make sure I go down to this time frame and scalp and get in. Stop all of that, because you're just giving yourself headache for no reason. Just learn how to become consistent in the market, understand the patterns of the market, and you become better. But as we can see, this was a fantastic trade. This trade did go up to about 390 pips and managed to hit past TP3. So this was a fantastic, great trade that I managed to give out to my VIP students. Like I said, if you want to find out your TP levels and stuff, you have to learn how to read market structure. And if you want to learn how to do that better, get into this mentorship. Don't be scared, man. Don't be scared. Okay, so for GBP or now, there wasn't clear enough bullish divergence around here for me, so I wouldn't say that was a great trade for me to enter. But there was some type of bearish divergence here. So you can see that even though we got entered here and we're still in the trade, well, we would have gotten about here because the divergence kicked in here. It even gave you a great entry on the normal TDI. This is the problem. It can give you great normal TDI divergence entries, but sometimes we just don't know. So let's say we did use our divergence TDI that's set like this, and we would have entered around about here. Let's just put a line there. So we still was in a position that if our stop loss, we can see here it did push up though and hit. Did it hit our stop loss? Yeah, it appeared it did hit our stop loss this time. So even though we still got a good trade from here, we got 50 pips, we got 80 pips out here. And once again, like I told you, it's trade management. And trade management is going to make you better and better with understanding how to, take your profits, how to stay in the market, how not to stay in the market. I enter a few pairs, so overall, collectively, I'm making money. So collectively, what my pips is or my profit is, then I will close other trades that I've seen haven't gone off or moved in time. I don't need to linger in or hang around inside the trade for a long period of time. You know, I just take my trades as they come in and stuff like that. I don't overthink trading at all. And that's one thing I always teach my students. Never overthink trading too much, because there's no point. We're not banks, so we don't know exactly what they're doing. Fantastic trade on GBP JPY. So we can see right here that we had a divergence form right here, bullish, and we would have gained entry right here. And then we would have caught this trade going up. This was a 245 pip trade. This was 68 pip stop loss. It was probably even random, but you could have put yourself at 25 to 50 pip stop loss. I'll suggest if you're looking to take bigger trades, make your stop loss more realistic to the trade size, you know, just until you get comfortable and collect enough data to realize, okay, when I'm entering a trade, maybe I can always use 25 pips instead of 50 pips, and I can put bigger lot sizes in to make more money from this type of trade. But this is all down to your data collection and you becoming a better professional trader. And let's see if we had one here. You even had another one here. So you can see I've marked this out from before, but we're going into when the market is still moving now. And you can see how I'm not even lying about what I'm showing you here, because look what happened here. I have a good feeling about this strategy. I feel a lot of people, you know, that are not in VIP will make money off of this and stuff like that. So, you know, if you do make money off of it, man, come on, man. Make sure you're hitting up these likes, these subscribes. Make sure you're sharing this video. Come on, man. Throw a dog a bone, man. Throw a dog a bone. Come on, don't be shy. Don't be shy. I always tell people in my group, don't be shy, because it takes a lot of time for any YouTuber to, you know, give out their free time to make sure they're giving out all this type of information and stuff like that. And the best thing you can do as any person, subscribe, like, comment. All of this helps with the YouTube algorithm. It helps my Discord grow if you're getting in there, you're speaking in there in a general group, or you're asking questions, you know, to me and stuff like that. It just helps. It helps with so much. So just take your, the same way I take my time out, just take your time out if you can as well, and it helps. And that's for anybody, it's not just myself. You know, I'm sure any YouTuber would be so happy if you just, you know, you stay part of the family and part of the team and support and give the best you can. So you can see here another bearish divergence formed right here on the TDI. You've got right here to here, you've got here to here, and then what happened? You would have gained entry right here, and you would have got this trade, and you'd have been in this sell right down here. Okay, here, fantastic trade. So we can see straight away here, there was a bullish divergence right here, and let's just mark out the TDI one from now so we can see right here. So right there, and then you would have gained entry here, and look how big this trade was going all the way up. So this is 259 pips. It even went higher than that, to be fair. This trade actually went 322 pips. Do you understand? So this is actually, you know, I'm going to see a lot of people making some money, man. Some money. They're going to be making some money. Yeah. And right there, you can see how it goes. So I would say you will make money with this strategy, but what will probably break a lot of people in this strategy, let's be honest with this, is you're going to get a lot of impatient traders. So instead of them keeping this strategy and saying, you know, this is what it is, this is what I get from it, and this is how I can trade from it, you're probably going to get a lot of people going down lower time frames and trying to do all of this and that. And this is not what I'm showing you. I'm on the 30-minute chart for a reason. This is why, because I'm starting to see that there's more clarity when you do something like this on this time frame. I'm not saying it won't work on lower time frames, but if you start doing that, you start losing and it's not consistent, then, you know, who do you have to blame but yourself? Because I'm teaching you something with specific settings for a reason. And there was two setups on NZDCHF, as you can see right here. We had a bearish divergence right here form, right here as well. So price was going down on the TDI, price was going up on price action, and you was able to catch this going all the way down here. This went down for 205 pips. You could add about 50 pip stop loss. If you want to work out your stop loss that you want, look at the ADR in a pair. The Asian range indicator shows you how big the ADR is. So it shows you here the ADR is 50 pips. So if you're looking for like 100, 200 pip move, then you know that, okay, this pair shouldn't really move on average more than 50 pips. So you're looking for a big trade, then it makes sense that your stop loss is 50 pips. So that helps you with your stop loss. Just look at the pair's ADR and work out a percentage of the pair's ADR. It doesn't have to be the exact number of the ADR, your stop loss, because some pairs have 150. Just make sure that it's a percentage of it, because realistically, if you're in the right trade, it shouldn't push back the whole ADR to hit your stop loss. It should really only push back either a percentage. So you just hopefully can have a better percentage than it hitting your stop loss. And you had another bullish price action move right here. You can see price going up as well. And then clear as day. You can see you would have gained entry here. Stop loss would have been below the low. There's another 50 pip stop loss, and you can see this happened right here. But once again, trade management, as I explained, this trade has not gone off yet. So these trades, yes, were beautiful. You would have managed to make loads of pips quick enough in a sense. But when you've got into other trades, you might be in these trades a while before they decide to buy. You have to learn how to be either patient, or you have to learn how to take your profits collectively with the other pairs you're trading and say, I'm coming out of this, this whole setups I'm in right now. I'll wait for some new ones. That is down to yourself. Trade management is key, and you will learn that as you get better and better at trading. You cannot rush trading, and it will not come to you in just one day or 1 week. I'm sorry, no one's going to tell you how to make 50 to 10,000 and you're going to make this 1 week and you're going to get it every single weekend. You've got to put the hours into chart time. Trust me, I tried to run, I tried to fly, I tried to do supersonic boom dive or whatever you want to call it, but I've had to take my time and put chart hours in to become as good as I am at trading at the moment. It's just that simple. Right here we can see on enter DJPY. This was another trade I gave out, and this one was actually in the general group. It was 100 pip trade I gave out, and I gave it out from this level. At first I gave it out from about, I think it was this level here, but then I moved it quickly as I saw price was creating these candles, so I put it down to here. So if some people did enter, they wouldn't have got stopped out, as you can see, because the stop loss was huge. It wasn't 10 pips, so they still would have been in that trade, but they could have gained another entry here, and the second entry was literally like 15 minutes after the first entry. I put the markup. You can see right again there was a nice little bullish divergence here on the TDI, price action showing a bullish divergence here, and we would have gained entry about here. Stop loss for me, when I give out signals and stuff like that, I always leave a bigger stop loss than usual, because I like to let the trades play out and stuff like that. I'm not trying to be some super sniper in the market. It just needs to give me some type of pips and I'm happy. So you can see straight away I gave about 80 pips stop loss on this trade, and I was looking for possible TP3 like Euro New Zealand did, because I saw there was a lot of volatility in the market. So I said, you know what, let me be smart and see if this will happen. And what happened is this trade actually managed to give the traders about 100 pips in this trade, which was fantastic. I love it when I can give out these trades to everybody and people can make money. It's not something I do every single day. I focus more on VIPs. I give out trades like this to my VIPs a lot of the time, and if not this with TP levels, it will at least be some type of markup saying possible rejection here, etc, etc. It might not be straightforward like this, but I can give out 10 of these a day, and we're talking 5 days a week sometimes. It's crazy. So trust me, I'm telling you, VIP is where it's at. NZD USD was another trade I believe I gave out to the VIPs this time. I put the stop loss at 75 pips, so it did go back into past break even and into profit by about, I think it was about 50 pips or something like that. So that was still a good trade I gave out last week. We can see that there was a bullish divergence from here to here and another one from here to here. And what happened? Price did buy up at X amount of pips. Let's just check how many pips this was. It's about 65 pips from there to there, which is great. You can see once again trade management. So if you didn't come out of this trade, there was news today that hit, pushed price all the way down here. And what's happening as I'm speaking to you right now, the correction. So you have an impulse and you have a correction. This happens in Forex a lot. It's to get you out of the trade. Once they've taken everybody out, they just went straight back to the low again, taking anybody out that was holding a swing trade for a buy, just for a correction. And this could continue to buy all the way up. SPX 500, US 500 for some people and brokers. This was great. This does not happen all the time with indices. I want to make sure I elaborate that indices, gold and stuff like that, this is why I'm not showing it like that, because I don't trade them specifically like this, because you have to make sure you're paying attention to structure when it comes to those things as well, because they love to overextend those pairs basically. And what happens is when they do, they can continue to overextend it to 4, 5, 6 times when you're only expecting 2. But you can see right here there was a bearish divergence that went from here to here. And what happened? We would have gained entry right here. So this was still good. Stop loss would have been above this high. You would have caught this trade. The same for the buy. I always tell people US 500, NAS, US 30. It's always better to buy those pairs than sell them. And I'll make a video on that shortly. That will probably be my next video. US 30, just to show people, because I've always said I'll do a US 30 video, but I've never really done one. So you can see, look how the RSI or TDI is going up, and look at what's happening with price. It just keeps spiking the bottom, not breaking this area. So this is obviously a strong level of support right here. Price did not break this level, failed to break this level, and then shot all the way back up with an engulfing candle, which is great for us. And then we would have been able to gain entry just around about here. So if we gain entry here, once again, our stop loss would have been below this low. You're really looking to take an overall TP at the high again. I don't know if I've mentioned that previously in this video, but I have mentioned it in my beginners course, my ultimate beginners course on YouTube. And you can watch that one, and it shows about double tops and double bottoms and how you can look for overall TP levels. And once again, you would have been able to catch this move going all the way up. Same as that plays on US 30. SPX and US 30 move very similar. They're very correlated. You would have been able to see. It's just that one moves more pips than the other, like more fast. So you make money faster on the other. We can see the same setup here, bearish divergence. Look at this fantastic trade going all the way down here. Then you had amazing bullish divergence here from here all the way to here. Look at the TDI creating two double bottoms. Let's just mark this out for the sake of the video. Right here, it's going to be a long video, but I go through these pairs and I do this so people can see the consistency and what I'm talking about, because there's no point if I don't show people the consistency and what I'm talking about, they won't be able to understand how these setups are looking. And you can go and back test them exactly how I'm showing you now. Mark them out like this and then go and collect your data, and then also now use a month to go and trade this type of setup and collect that same data live. You can do that. I don't want to have to go and do that myself, because obviously it takes time out of everything I'm doing. I'm sure you can imagine how much time it takes to do this, but I do data collection for my students for the main strategy I teach there. So you can see here again, you would have gained entry here, and you would have been able to catch this massive buy going all the way up here. I mean, this is just crazy what I'm showing you right now. This is crazy. It's just pips on top of pips, man. Come on, man. Pips on top of pips. USD CAD, same thing here. You can see that there was bullish divergence. You would have easily been able to catch this move. You know, this is 30 minutes. So you had what? Almost 2 hours to get in entry into this trade, if not longer. You would have been able to get in right here, stop below the low. Look at this buy that went all the way up. It's like 250 pips, if not more. And then once again, you would have been looking for a sell. So I did mark this out like this so you can see something here. So some people would have said, okay, let me try and get in here for this sell, and they would have got stopped out right here on this trade. But that's cool. Like I explained to you, if you're making more than you're losing in terms of risk to reward, then you're okay, because you would have re-entered right here. So this was the real divergence this time. Yeah. And when you've now traded here, look at this right here, you would have been in this trade here. So before this trade did buy all the way up, you would have made all of these pips going down, which was 100 pips. So you could have won this trade massive, lost this trade, won this trade going back down. Simple. This was a fantastic trade as well. This is something we marked out in VIP on our Sunday Zooms. On Sunday, I like to do Zoom meetings that covers technical analysis. Right now I'm trying to do it every Sunday, but of course if I'm busy, then it'll be maybe during the week, or it'll be every fortnight. So, but we can see here that this was a fantastic setup that we've looked at. This is why these arrows are here. These arrows were here before price did this. We can see that there was a bearish divergence on price action right here. Let's just mark it out on the TDI as well. So you can see the TDI was going down right about here. And then we would have gained entry right here. Look at that. Pretty much almost no drawdown, and you would have caught this trade going all the way down straight away. And here as well, look at this buy. You know, this, I can't make this stuff up. I can't make this stuff up. Come on, guys. Like, comment, share, subscribe. Let's get it going. If you make money off these trades as well in my Discord, please post it in the testimonials. Thanks, Big John. Yo, look at this. This is what Big John is showing us on YouTube. This is the strategy. It's going. I haven't even got a name for this yet, but right now we'll just call it I don't know. Maybe let's call it something like Twin Blade. I don't know. We'll see how it goes. You know, that's just something I'm throwing out there, because it's a double oscillator setup. Look at this straight away. We can see there was divergence here. Look at this. Clear as day. Look how much time it's giving you. And now what happened? You would have even gained entry right here. Why I say you can gain entry here is because look, price went up, price pulled back down. So it looks like it's giving you another entry. You could have got in here for a possible buy. Look how clean that buy was. Even though it did sell back down straight away, you still could have caught that buy. You could have got in, got out. It was news today, high impact USD news. So obviously if you're entering trades, pay attention to what's happening. You can't just expect the trade to buy or sell down forever. Expect that it can go up in your favor or down, and it can pull back. It's news. And that's what you're seeing now. You're seeing a lot of pairs going in one direction, pulling back in the other direction because of, you know, it's news. It's high impact. And this is going to be the best trade, I think. This trade was crazy. I caught this trade on a funding talent account at a 45 lot size. And I told people this trade was going to happen. We spoke about it in a Zoom technical analysis meeting 2 Sundays before this one. And you can even see, once again, I've got the green arrows marked out, so you can see it was there. This is before the trade did this. And I said that, yeah, I got entry right here. Same thing happened. You know, when I put on this strategy with it, I was like, oh my gosh, this is crazy. So let's get this divergence in here properly. So we can see, yeah, right here to here, I believe it is. Yeah. So look at this bearish divergence. So you've got price action going all the way up, TDI going all the way down, and then you would have been able to gain entry right here. Once you gain entry right here, look at this trade going all the way down. And then there was another one going here for the buy going up right now. So we can see the same thing. Look, price action going down, TDI going up like this. Perfect. And then you would have got a nice entry on this trade. So that about wraps it up for this video. It is a bit of a long one, I know that, because I am going through every pair. I hope you have stuck around to the end, because I always say some valuable little gems throughout the video. So impatient people will not learn those gems because they just want to be in and out and find exactly what they can do to make money. You know, you got to watch these videos because I'm telling you some stuff that I'm learning, and I'm falling asleep at the laptop learning some of this stuff because I'm so tired, you know what I mean? Just checking and making sure my chart, you know, my chart setups and how I'm looking at the charts is to a good standard, basically. So I suggest a lot of people do that themselves as well. Get yourself involved in Forex properly. Don't be, you know, half-hearted about it. You need to be fully involved if you really want to become great at Forex. And eventually you won't have to spend that much time on the charts because you just know what's what. So I'm not saying that's myself for now. I'm really not. I'm very humble with this. I'm not saying that you're just going to become a master in 1 second or anything like that. Take your time, be humble, be thankful to God. Just be happy, you know, if you do believe in religion and stuff like that, be thankful because we're still here, we're still breathing, and we still have time to hopefully achieve our goals. So because we're at the end of the video now, what you want to type for the new signal competition, I want signals are the best. That's what I want this time. Why I'm saying this is because now I know you've watched to the end of the video. So signals are the best. Even some people might not think they are, but I'm just throwing out some phrases there. Signals are the best. Once you put that in there, then I'm going to know that obviously you're entering yourself for the signal competition. That's going to end in July. And there's going to be another 3 lucky winners. Not 1, but 3. We on this triple source. Yeah. And all the settings for what I said in the video are going to be following. So on that note, like, comment, share, subscribe. Have a lovely day. Have a lovely evening, wherever you are in the world. And peace.